Hey, happy Monday, everybody. Hope you all had a great weekend. I know that we did. Not a lot of time for relaxing, though. Saturday was a very full day of getting people pre approved. Had a lot of people write offers on homes last week and this weekend. So the market has just really seemed like it's really heated up. So it's pretty exciting. If you kept your eyes on the market last week, you see that we did have some big changes on Friday when our BLS jobs report came out and showed 517,000 new jobs created in January. That blew all the estimates out of the water and did cause the bond market to turn a little bit negative. Some people have asked me, why does a good jobs report hurt interest rates? Well, the main reason is it shows that the economy is not slowing down. And actually, it's still rolling at a pretty good pace, which means inflation could last longer than what some of the analysts are anticipating. You know how much the bond market interest rates hate inflation. So, that's the main reason why it was negative. As for morning stocks and bonds, both opened lower at the start of the week after some tough talk by the Bank of England and the European Central Bank. Over the weekend, both the ECB and the BOE said that the risk of tightening is dwarfed by the risk of doing too little. They said that monetary policy has to have teeth to show that they're going to get inflation under control. These comments on the heels of a stronger BLS report, it makes sense why that hurts the market so much. And it put kind of a shockwave through the market this morning, thinking that maybe there'll be stronger tightening and that we don't actually have control over inflation. So that's why we've seen the interest rates kind of take a hit these last 2 days. Nothing giant, but still some moves and some good reasons why. We do have a busy week this week. Fed Chairman Jerome Powell's speech is on Tuesday. Initial jobless claims will come out on Thursday. And then we have to see how the State of the Union address is going to affect the markets as well this week. I had a lot of people ask me really over the last 10 days if they should buy now or wait. And my answer has been sure. Mortgage rates have declined from the highest that it reached last year. And you may be wondering if you should wait for them to drop further before making your purchase. And I explained to them why it's more beneficial to act now instead. Recently, we received December's pending home sales data, which measured signed contracts on existing homes. And the number came in better than expected. And we've also started to see other home and housing figures improve, like new home sales. This rebound means activity has definitely picked up and it'll likely just increase from here. So instead of waiting, a better tactic would be to purchase the home today while there's a little less competition and more room for negotiation. This will help the buyer get a better deal. And if rates do move lower, like they will, like we plan to, you can always refinance your loan in the future, benefiting from today's sales price and then getting a lower rate in the future. And keep in mind, here at Nest Mortgage Group, we do offer some great refinance options. If we do your mortgage for you and interest rates get low enough to refinance within the first 6 months of getting your mortgage, or after the first 6 months of getting your mortgage and within the first 3 years, we have as low as a free refinance to no lender fee refinances to other types of savings options depending on the deal that you have, like no appraisals, reduced title fees, all of those type of things. So, and we do have a completely free refinance as well. So those are things that we'll be reaching out to clients about after interest rates come down and the market kind of stabilizes a little bit. We are still 24-hour underwriting time, 24 hours condition clearing, so still closing all loan types in less than 30 days. If you have a buyer that needs to close fast, we definitely can do that. We still have a lot of luck with appraisal waivers. I actually had 2 people put in offers this weekend that we received appraisal waivers on, and I actually got an appraisal waiver on a client today as well. So if you've got a person that's putting down more than 20% and they're going conventional, there's a great chance we could get an appraisal waiver. And if you don't know how to do that, or you have a lender that's not doing that for you, call me. I'll walk you through the process. We are doing 1 hour pre-approval 7 days a week. So call me, Brad Niccum, 317-538-9825. Hope you have a great week. Thanks.